Happy Monday, day traders. My name is François. I believe that you got in and spent a nice weekend with your family and your friend. You came here for knowing what will potentially happen this week on financial markets. So let me do that for you through this financial program, which is weekly market analysis. We are a trading online academy. So if you're interested to be framed and to have like uh, financial course and also to be mentored, please be consult the www.globalstreettrader.com. Okay, and also see us through the different social media as well as you see in front of the screen. Okay, so here the disclaimer. Our traditional disclaimer. This week we be very a bit busy because we will have the non-farm payroll at the Friday, which is my birthday, the 5th April, and also a couple indicators which is very much expected as the durable goods as well and retail sales. So it will be definitely a great way for starting this month to see the global overview of the financial markets. Okay. So I'm hoping that you take a note, you've noticed for the disclaimer. Okay, so weekly market analysis, April number 10, okay, number 10th, which is starting from today until the Friday. So we will see our traditional asset that we used to discuss, but for the this month, which is April, is a kind of it's look like some optimism, and it could be a key for turning point for global growth, especially on the free financial theme that we just discuss usually through our this financial broadcast, or also through the financial topics of the news, which is the third, the strike free for the Prime Minister of Great Britain, which is Theresa May. And it could be interpreted as the main long extension. And oil also realized a best quarter in almost a decade, and it could may also continue. We have also the Australian rate decision. I mean, Australian and like New Zealand is not it's not very important as the big markets, but it could also influence a bit some trader which is start if you they look to for diversify their portfolio, and they can said dollar is very risky for investing, euro as well, so we could going to see Australian dollar or New Zealand dollar, so it could be an alternative for major trader. So Australian rate decision, budget, and election announcement on tap will be those three themes could motivate this April new month starting, and we could have some surprise. So we will carefully see what will be presented as this technical and fundamental financial broadcast. Okay. Cool. So let's jump now to our traditional, which is USD CAD. So as you see here, this week, as I said, we will have retail sales. Retail sales is expecting to the declines. The anticipation is 0.2%, and the last consensus was 0.3%. And the retail sales is a kind of motivating the Fed for continuing for the monetary policy, right? So if we can take a look quickly on the DXY, which is the dollar index. So if you see here, it looks like a bearish pattern, right? Because traders could anticipating, they always anticipating forward those macroeconomic data. So we could have we break this ascending wedge. We have a kind of a squeeze on this area, and here is representing the major line points. If we break it, this purple point, which is 97 points, we could have a massive acceleration of the DXY in technical observation. But retail is a conditioning by retail sales, ISM manufacturing too for the PMI, and also the durable goods. Durable goods is also waiting for to be a great figures. Is it just like an update for the MOM February, and it's anticipating the for the previous we have 0.4%, and the anticipation is minus 0.7%. So it's very very bad figures for durable goods. And if we see this update have been made and we see those kind of figures, it could be very dramatic for the DXY. But just in intraday, it's just the compilation of bad figures, which will be definitely a bad observation as well on the DXY. So we clearly see that the dollar has been is doing like a couple great days in a row. If we're going to the daily, we will see clearly that we have a couple succession of green candles. So he's doing maybe 6 or 7 day in a row to be green, and now we close at the pin bar here, right, for the daily. So we have a green candle, we have a pin bar which is slightly above the previous candle, and we're starting to have a bearish candle. So those configuration looks like very bearish for the dollar, based on the fact that we have you know, a bearish movement, acceleration, and bearish movement again, and acceleration. So we probably repeat this scenario, and the neckline was here, and we didn't reach that neckline, right? This level, which is 97.60. Okay, so I mean, dollar has looked like very priced at bearish, and also the tones of the Fed, which is very accommodative. So it's play against the dollar. So probably will be a boost for others pair, which is follow of the dollar. So if you get back to the USD CAD, so USD CAD is very it would be some like it's follow for sure. The dollar is the leader. So I'm expecting that the market going until that level. Before that, I intend to short, right? And it's this scenario that I intend to have, right? So market could going test that level here, or maybe here. Why not? We don't know actually what will be it depends of the progression of the dollar. But as long as the USD can make a new high, it will be a best point anyway for short. So we can short here, or we could short also here, right? It depends where the pullback will be done. But if you want to trade USD CAD as to be bearish, the scenario plan will be just waiting a new high around this yellow, between that blue line and orange line here, the zone. And then after this new high, if we see a new failure, then you can short the market. So USD CAD definitely it'll be short for this new month, which is starting. If we follow those anticipation for the macroeconomic data, and also this bias contained by the Fed, by the dovish Fed, and also those macroeconomic figures. Okay, so we could also take a look on the DJIA, which is Dow Jones. We are an intraday for 4-hour time frame. We close very straight on the slightly above the yellow line here, which is 25,910. And I'm assuming that the Dow Jones realized some and it closed at the new high on this month. So it's great. And those are, you know, those recover and those bullish movement here. It's just conditioned by the progression of the oil and also by the tones of the Fed, right? And also by the optimism of the trade balance, the trade deal with China and US. So those three things are very play with the Dow Jones. But as long as we progress and we don't see any incertitude for those financial themes, it will put some a pressure on the index, right? About the oil, we kind of observing that the oil will not reaching the global demand as we mentioned and as they decided first, because um, oil has a great quarter for sure, and we saw that the level as reaching $60 per barrel, and it's a very great progression for the oil. And the recent rise stem for growing optimism on global growth and will continue to decline for the US rigs, which is the Baker Hughes indicators. And also some of the April optimism is high for the US, right? But we see technically on the US that we are in, you know, bearish configuration based on the fact that the Fed you know, sounds more and more dovish. And regarding the production cut for the OPEC, and also the fact that they will be very effective in stabilizing the price. And if we continue that, also to be here supportive comment from Russia, the price could remain well supported, definitely. But it's just about a speculative movement, right? Because on the fact, if we could not reach the global oil demand and they're starting to increase the support, we could have also like a bearish movement upcoming. So people could anticipating a major slowing a major slowing on the global assets, you know, for the economy. So I would like to show you just a little bit comparison of the S&P 500, right? If we let me put that for you, and we see my vision on that, because it's very tricky as for now. So let's compare the S&P 500 with the 10 yield, so the bond yield, and also we put that the oil, okay, US oil, because we know that inflation is not good with the bond market, okay. Okay, so we put that and what's happened here. I don't know why this chart doesn't like works. I just want to show you how the chart looks. But apparently, as you see here on the green is the 10 yield bond. It's pretty the same. Oh, because there's a 2 times. Okay, sorry about that. So cancel that. And so we compare that. So S&P 500 US bond yields 10 years, and we put also the oil. Yes, sorry. It's my bad. Oil. So here. Okay, good. So we see here clearly that's the as we've seen the evolution of the S&P 500, the 10 years, so it's statistically and inversely correlated, and also the oil follows the progressive evolution of the 10 years, right? So we could see kind of decorrelation here, and after recorrelation because of the bias. We actually do know if when the oil will be priced and accelerating is very bad for the bond. So we could have some a dovish bond yield. That's why we see here that's the yield, fall, and also the oil accelerate, right? Because bond is not good with inflation, right? Because when we have an acceleration for the oil, it means that people they price for to have a good level for the for reaching like a target for inflation, and they also take a note that we could have a great pace of the growth. But what if the oil doesn't follow this pace, and we could have a crunch of the demand, the future demand of the oil. We could also see a retraction of the oil, and then the yield could starting now to have acceleration, and also a massive decline could be observed for the SP 500, right, for the major index, if we have this kind of scenario for the future, right? So that's why I'm telling you that we are not out yet on the hostel, because those scenario and those progression are just based on the fact that we do have a great a great sound from the Fed. They are playing dovish, and also we have a great sound also for the oil at that time, but it won't continue for sure like this. We could have also and about the optimistic um, point of view for the trade deal. So if those three films are just finished and we stop to have like great echo, we could have also a bearish movement upcoming on the Dow Jones, and as also at the SP 500, right? So that's why the fact that technically we slightly close on this level and is not doing like a really great true high, and as you see the twins brother candle here, those kind of figures which is intervene and or preceded by the bullish movement here, it means that technically we could have some a stabilization here, or after a decline upcoming, right? So that's why I'm telling you to be very careful. And basically, mine, I'm bearish of that. Okay, on the Dow Jones, and I will give you the level at the end of the this position where I'm supposed to be bearish on the level. It would be if we break directly this level, right? For the if you're doing the return, which is 25,770. Okay. So if you take a look also on the gold, I mean, it was bullish before. It's because it's based again on the it was priced by the Brexit scenario. So Brexit drama now play against the gold. The fact that Theresa May lose the third strike on the negotiation, it's just said that the hypothesis for the fact that the gold will be not the gold, the GBP, we could have potentially a second referendum, or also have a soft Brexit. That's playing against the gold, right? And also the dollar was some of also bullish before, so that's why those two elements price at the bearish point. We have also technically in enlarged ascending wedge, which is usually a bearish configuration. So those couple details for the bearish has played against the gold for sure, but we are also a major support at 1280, and point of control is 1289, so at the white line here. So as long that we stay above this line, we could have, or we could expect some an impulsive movement, right? But if we break all that level, is of kind of validating some like an ugly head and shoulder, right? So we see, and this head and shoulder could be very valid because it intervened at the preceded by the bullish uptrend, right? So those head and shoulder, it's very impacting the market because it's a reversal movement, right? So if it's coming after the a preceded bullish movement, we could definitely make sure that if the market break that's major support, we could play the role as the neckline. It would be a massive bearish movement, and it could reach the 1240 level. It depends if we doing like the report and see where it potentially could go. We could test that. So we just take the neckline here from neckline and the head, and we just reported that. Okay, right? So theoretically, the level could be there, right? By the theoretical report, but we don't go there right now. I just say if you break this right line zone here, right? If it's failed, but at that time, as long as we keeping this level at high, we could have an acceleration for the gold. So very careful with gold now. I'm just putting beside gold for now. I'm not playing there. I'm just observing how the dollar will be what shape will be show, and also depends on the macroeconomic bias, what be the potential progression of that. Okay. So to finish this financial broadcast, we take a look quickly for the bond. The bond is always the same song, is just for neutral. We could anticipate, for sure, anticipating the TLTRO4 after the free falling. So we have some of a retraction of the on the bond here, but the blue line is show us how the bond is priced to be a bull. So it's if you see here, we have a gap filled, and if we overcome this level, we could have like a acceleration for the bond. But the bias is definitely bull. So right now it's just like a partial profit taking, and maybe we'll be test another gap here at the 165. And why not, if the line have been kept, the market could also have an impulsive movement for going to the top. So nothing special there, right? All right. So weekly market strategy here as a front of screen. So here's the card. I'm bearish. As I see, we clearly close in massive bearish weekly and daily candle. So we have definitely bearish expectation in the upcoming. We just have to wait those level. $33,785 and $33,880. So this level here before to get entry short, right? Because Canadian PPI, which is the production price index, have been very dovish, and bullish, and a GDP as well, because it was anticipating at the minus 0.3 and is released at the 0.3%. And also the GDP were expected by the 0% and is made 0.3%. So it's pushing the loonie higher. So it just gave a bullish bias for the CAD that we start for the April, but we have to let the market, progressively show what would be the turning king point it will be making. Okay. So Kaplan, which is Robert Kaplan, is the Dallas Fed boss, which he used to be dovish on the financial media. Eric Rosengren, he is the Boston Fed, and Randy Corliss is a vice chairman for the FOMC, and Larry Kudlow, which is the special economic advisor for the White House. They are deeply divide in the question of the monetary policy. So that's putting a bearish bias on the DXY. So if we break the level for the 97 point, technically, we could have a severe decline for the dollar. So we'll be very careful of that. And based on the index, it's just we can say that it's priced to be bearish because we have a lot of uncertainty for the global opinion for the markets. Germany, the exposure for the Turkey could price at be in the recession. We have also a fail for the TLT003, and so they're starting to launch a new TLT or for the big German banks as the Danske Bank, Commerzbank, and those stuff. So those economic measure could just show that the index are still warming on the market, right? So that puts a bearish bias also on the Dow Jones, because from that moment it will just be supported by the positive echo on the trade deal between China and US, and also the fall of the potential hypothesis of the soft Brexit. Okay, and it's the same thing as well for the gold. Okay, so that will be all for all this market strategy. If you like it, so please put a thumbs up. We appreciate for that. You can share and like also this video, this content. And if you have a question about like the fundamental and or technical analysis, you can leave a comment below this video or send us a message at our mail, which is contact@globalstreettrader.com. Thank you so much for watching this video and have a great day. Bye-bye.